builders, it is me again, your private money headhunter, Nick Billions, bringing you another private money drive-by educational video brought to you by the Mills Funding Group LLC, an apartment acquisition and an asset management company. And today we're going to talk about to be a debt partner or an equity partner. That is the question. So let's jump right into it. First and foremost, always the disclaimer: I am not a lawyer, CPA, or securities professional. This info is purely based off of personal experience and opinion. It should be consulted and verified by your attorney and CPA before moving forward with any mentioned investment strategies. This information here is purely educational and not intended to present or market any securities opportunities. Now first, what is a debt partner? A debt partner receives preferred interest in an investment, and rates that we have for debt partners that usually discussed at our second meetings after we do an initial meet and greet and have a 30-day grace period before we meet up with them again. Debt partners usually are used for properties under $1 million because usually any property under $1 million, you don't want to put too much risk out there with the mortgage. You just want to pay for the property all cash and increase and maximize your equity so it can be easier to do a refi or a sale of the property. A debt partner is paid back at the time of a refinance or a sale, typically between 1 to 3 years, depending on how the market is talking back to us and allowing us to take advantage of what's available. There's no further involvement required. You wait until the refinance or sale to be paid back the principal and agreed upon a simple interest rate that was agreed at the second meeting and on your subscription agreement between you and the main facilitator. It's great for those who irks at the involvement of property management and decision making. And just think of a debt partner like this. It's just like when you go to a bank to set up a CD and it has a maturity period, only in this case we give you the best interest that your money deserves. An equity partner. Now equity partner is where everybody aims for today because it has more benefits and less risk involved. The percentage of cash flow and ownership is brought in depending on the percentage invested in the property, which is done on a deal by deal basis. It's primarily used for properties over $1 million because with equity partnerships you have more flexibilities for mortgages and or just discounted all cash sales. Debt equity partners are paid at a quarterly basis and at the time of the refinance or sale, typically 3 to 5 years. And the reason that we stretch out the holding period a bit longer is because we offer the opportunity to pay them on a quarterly basis, so that we hedge any type of inflation that may come about. Plus the properties cost more, so it takes a little more time for that debt service to go down and for the equity to come up and for us to raise rents in bigger communities. Also for equity partners, what we have available, which is one of our marketing advantages, is that you can get paid monthly with a $200K and $200,000 and up financial commitment, but that's more in detail in some of our future educational videos. It is open for the equity partner to participate in our conference calls and be available for property management discussions. Even though with our LP setup, the equity partner won't be a general partner where they make major decisions, they can still get involved and may make a few suggestions that'll go under advisement. And the equity partners also for people who desires passive income. You don't want to just give out a loan, but you want to get paid off of the interest that you're being paid throughout the year of however long your money is held. And equity partners usually are involved on $100,000 and up investment units, which means that all opportunities that we bring to the table usually are going to involve each investor to bring in at least $100,000 or more to be involved in that investment. These are like the bigger, better deals that we involve investors in. That is it, people. Like I said, another private money drive-by educational video brought to you by the Mills Funding Group LLC, an apartment acquisition asset management company. Again, I'm your private money headhunter, Nick Billions, and for more of what we do and offer, you want to go to our homepage at privatemoney.vanitcompanies.com. You want to like and subscribe to our Facebook page at facebook.com/Private Money Savior, and like, subscribe, and comment on our YouTube page of videos at youtube.com/Mills Funding Group. Thanks again, and we'll talk to you soon on the next video.